Open on your screen, we are at 21,930 is where we are at. Sensex is at 72,272. So it's a slight tinge of red after yesterday's sharp sell-off that we got. We had 21,920. Bank Nifty, by the way, is down about 85 points. We're at 45,880 at this point in time. Advanced decline, by the way, is positive, but not by much. 200 stocks separating gainers and losers on the BSE. Sonia's got more rates. Sonia.
All right, thanks a lot for that. So as we were expecting, right, the market is under slight amount of pressure right now, down about 0.2%. It's a Nifty bank that's dragging the market down about 130 odd points. But let's get straight to individual stocks because it's definitely Reliance that is top of mind right now. The Reliance-Disney merger, that $8.5 billion media Goliath, and Reliance is reacting well, up about 0.8%. Would be interesting to see what TV18 Broadcast is doing because that stock as well in pre-opening was up quite a bit. Now it's a tad bit in the green, so we'll just take a look at some of those other stocks in that space. A couple of other names that I'm looking at this morning. Shriram Finance will be included in the Nifty 50 index. That happens from the 28th of March. So Shriram Finance is the stock that is up almost 3.5% as we speak. Talking about some exclusions, UPL will be excluded from Nifty 50. So that one is down 0.6%. Geo Finance will be included in the Nifty Next 50 from the 28th of March. So keep Geo Finance as well on your radar. Just look at that now, up almost about 2%. PB Fintech is the next one I'm looking at. Yash was telling us that the company can now operate in the reinsurance broking space, which is a big market. So the street is reacting well to that, up 1.5%. Some large caps in focus. Tata Motors has seen two downgrades come in this morning. One of them is CLSA, where they have downgraded it to an outperform, but the target price is still above the current market price at about 1,061. SBI in focus as well. Kotak Institutional Equities has raised their target price on SBI to 850 from 760 earlier. So that one continues to be in the green this morning. You have JSW Infra, where Motilal Oswal has initiated coverage on JSW Infra. They have a buy with the target price of 300 and hence that stock is up about 2.5%. And then you have NTPC, the joint venture with Mahagenco for green energy parks is something that could, get NTPC higher this morning, up 0.2%. And some technical changes. Bajaj Auto goes ex buyback today, so keep an eye out on that. That one in pre-opening was down about 2.5%. But other than that, the market is very, very quiet right now. Little bit of pressure coming in from the Nifty banks, but it's all about individual stocks this morning. Back to you.
Well, that's right. Let's focus on a few more stocks then from the broader market. Juniper Hotels, yesterday it was a big outperformer. It listed flattish, then in fact it piled on gains and ended with a gain of more than 10%. Today it's building onto those gains. So that's up another 3%, I think, the last time I checked. Juniper Hotels is the new kid on the block, should come up for you on the screen. All Cargo Logistics, another big volume mover. That stock is well holding higher in trade. Ujjivan Small Finance Bank, that stock as well is up and about in today's trading session. So some of these stocks should come up for you. And you also have Hind Rectifiers. Last couple of days, the stock has been doing quite well. Well, it was up close to 10%, I think, the last two sessions, post a big order win. Today, that circuit is released. I think the stock is up only around, it's up now 6%, it's up only around 2% or thereabouts. But that's had a big run in the last few sessions. KSP, they came out with a set of numbers. That's one of the losers, down close to around 4%. While Geo Finance, that dip that we saw in the last few sessions, that's getting bought into because it's going to be part of the Nifty Next 50. So, that stock, in fact, is now up close to around 3.5%. Been a rank outperformer in the last 45 days. Last two sessions, it corrected close to 10% from the top. Today, it's back to its winning ways. Prashant.
So that's a sort of long list of names that we kind of sort of addressed. I just want to take a quick look at what the rest of the market is also doing. So 20 points lower is what we have on the Nifty. So it's absolutely flat. We got the Nifty Bank, which is down about 0.1. I think 60 points or so. So not very much. Mid Cap Index is down about 0.5% or so, and you've got the Small Cap Index, which is down about 0.34, 0.4%. Maybe a few more names before we kind of get in. By the way, the market breadth has turned negative. So about 1,050 down as compared to 900 up. That's the NSE coming up. Bajaj is down 3%. It's got large volumes on it. 7940 on Bajaj Auto. By the way, the top traded stock is a small name, now small name. I think JP at one point used to be part of the index and all. JP is down 4.5%. It's got the largest volumes across the NSE. Indiabulls Housing is down 3%, 181. I think there is some sort of news there. KPI Green is down 5%, large volumes on it as well. Paytm is back under 400 bucks, 393, down 3%. There is Max Health, which is down about 3%. TV18 Broadcast is coming up with a 4.5% cut, 59, just under 60 rupees there. ICICI Lombard had a decent up move over the last few days. It's down 3%. So again, large name. Chennai Petro is coming up with a 2.5% knock. Most of these names, I mean, you've got to remember the context. They've all done so well. And Macrotech is down about 2.5%. Stocks at about 1124. That is Loda, which is coming up with a cut. So these are the largest volume traded names. There's other names as well, but we can kind of talk about that later. You know, Juniper Hotels, of course, started flat yesterday, ended 10% higher. I think it's done something similar today as well. So Juniper, by the way, opened at 400. 405 was the open. It's at 430 right now. So that's basically the a bunch of the higher group of hotels which we're talking about. Cochin Shipyard is up a little bit. Venus Pipe is coming up with a 4.5% gain, and something like All Cargo is up about 7% as well. More stocks in a bit from now, but that's the overall picture at this point, which is about 5 minutes into open. Well, Sridhar Sivaram is investment director at Enam Holdings. He's with us in our studios here. Sridhar, great to have you with us here.
Thanks for inviting me.
Appreciate your time. You know, I just want to start with the PSU space.
Sure.
And I wanted to do this for a while. You're coming back to us after a while. You remember we we were on the newsroom floor, the
yes,
three of us, and we
back.
spoke with you. That was on the 7th of December. And we were talking about, and I asked you, what's the best way to play it? And you said, well, maybe a PSU fund does it. So I looked at the SBI mutual fund, PSU fund NAV. It was at about 21, 22. At about 29 this morning, 28.5 or something. It's a neat 20% kind of a return that we've had in that space via a mutual fund entity. I mean, if you bought some of the big winners, you're up big time. But what from here, Sridhar, in your opinion?
So after the interview, I sent the interview clip to the CIO of SBI Mutual Fund saying that I'm marketing for your fund. You guys should do a better job. Look at the fund size, it's hardly anything. Yeah, but...
and it's done well since. It's done well since.
Yeah, so I guess the flavor has now sort of picked up.
Yeah.
I would say that within our office itself, now we have a lot of difference of opinion on PSUs. Obviously, because stocks have done so well.
Yeah.
So I think I still own the fund, so I want to put a caveat that I personally own the fund. I'm still owning it. So that tells you where I'm positioned vis-a-vis a lot of my colleagues in my office. I think the story is not as clear now because some PSUs have really gone through the roof. The valuations are very high. In some cases, you can say that they're fair value, and from here, maybe earnings growth will determine how they will play out. But normally, what happens when you have a leader or a market leadership which comes up to a sector, it doesn't fade away in 3 years. I think it goes on for 5 to 7 years. How it plays out from here, only time will tell. I think this stays. This theme stays. We will find new leaders, like we are seeing in utility space. There is story picking up there. So I wouldn't say that the entire story is now over, done and dusted. But the pace at which the returns were over the last 3 years, surely that will come off.
Sridhar, so money is still coming in, right? I think there was the SBI Energy Fund, which was launched, right?
Yeah,
I think it's collected about
7,000
crores.
Yeah.
And there are 12, 13 investable names in that space,
yeah.
realistically speaking. So,
but Prashant,
and stocks
as
have
we've
done
seen,
well.
Money came into the new age stocks also.
Yeah.
Eventually, what determines the return.
You're not surely suggesting that these will suffer the fate.
No. I'm saying eventually what determines the stock price is the earnings. So some of the new age technology companies have now changed their business model and they're showing path to profitability.
No, my limited point is for now money is coming.
Yes.
And mutual funds will not sit on cash. They'll have to buy.
Yeah, they will buy.
So,
but they are large list. Energy as a space, if you see, they are very large companies and they're very liquid. These are not the small and mid cap like what you see in, say, defense or in some of the other thematic plays where the liquidity is an issue. I don't see liquidity being an issue that because of the large NFO or something that stock price goes up, I'll be very surprised.
Okay, by the way, don't lose sight of what's happening in the market. The mid cap index is under quite a bit of pressure, actually, 1% knockdown already. The index is down about 400 points. But Sridhar, hi, welcome to the show. I think one of the high points of your career will be catching the bottom in the PSU banking space. I remember we had this chat about almost 2 years ago, right?
Yes.
In our Smart Money show. But kudos to you for that. Help us pick the next leaders of this rally. Where do you see value now in the market?
Yeah, so if I look at, the other theme which I'm very excited about is actually the entire energy space, which is the power energy space, which I'm saying. So if we look at today, we have about 220 gigawatts of thermal power. And from what I understand from experts in the industry, that we are already hitting peak capacity every day during, between 6 and 8 p.m. every day, because we haven't invested in thermal. Our wind energy will double in the next 4 years from say 40-45 gigawatts to around 80-85. Our solar will triple in the next 3 years from about 70 to 220. And this is a space where you can pick and choose whatever you like, because it's not just the people who are setting up the power. You have ancillaries who are the equipment suppliers, you have transmission. So you can pick right from the utility to the last guy who supplies the equipment.
So there are these names, right? There's Startup Power, NTPC, JSW Energy, all these guys. But many of these stocks have rallied quite a bit also. But you think it's still nascent stage?
Yeah, so it, as I said, it depends on what your outlook for earnings is. You can pick from either the utilities, which you named, or you can pick, say, either the wind or solar. There are a number of names there where you're seeing, order books really coming through in a large way. You can look at transformer guys, or you can look at transmission guys who put up transmission lines. The entire space is looking very exciting only because the government is also pushing. So after, I would say, the last cycle when we saw this whole bump up for power, I think it's only now that we are serious investors and even the companies are putting up capacity. So I think that space is looking very exciting. If you ask me that after PSUs, if I'm excited about a segment, this looks very exciting.
All right. Hi, Sridhar. Good to see you. When, as you enter the studio, I think all of our minds go back to that conversation we had on the PSU names, and the PSU mutual fund. I'll tell you, I missed the trick in the book because I didn't have exposure there. But I took the advice on gold and I picked up some sovereign gold bonds as well. That aside, I wanted to ask you about this PSU versus private sector banks.
Sure.
After a very, very long time, it's not just a stock price move, but even fundamentally, if I look at an SBI, the way the loan growth is shaping up, the ROEs at current reckoning, it's matching HDFC Bank for this year. And they're also better positioned on the CASA side. At current prices, one has done very well, one is yet to catch up. What would your preference be, particularly from the banking space? I ask you this because there is comfort on valuations.
Yeah. So I think for the financials in general, I think the next 2 quarters may be slightly difficult because liquidity in the system is very tight. There is a scramble for deposits.
Yes.
And I would say banks which have a better CD ratio are better positioned to move forward, because RBI is also in a very subtle way hinting at banks to bring their CD ratios to a more reasonable level. So if your CD ratio is very high, you'll have to reduce your loan growth. If I put everything together, the private sector may struggle for another 2 quarters, but eventually they'll come because these are great franchises and they have all the building blocks, and we are going through a credit cycle where your credit cost is almost at the bottom right now. I don't see that really going through the roof, but it may inch a bit. So which is why I said the next 2-3 quarters may be slightly challenging. During this period, maybe the PSUs could do slightly better, but I look at the financials as a basket and see which are the stocks which I like from a bottom up.
Yes.
So when I look at my own personal portfolio, I have more PSUs than private, but I do have private sector banks also. But this can change in say 3-4 months. If liquidity improves, the private sector suddenly starts to look far better.
Yes.
But I think financials may struggle for another 2 quarters. That's my
But so incremental money would go what? I mean, as of now, PSUs are outpaying private sector in your portfolio. But if you do allocate money from today onwards, would it be even Stevens, or would you continue what you've done? PSU.
I will continue.
What?
Okay, you will continue. Anything else? Energy space is doing well, you're saying, whether it's thermal, whether it's renewable. Any other spaces that look attractive to you now with a 12 to 18 month horizon?
I think the rest, we've been bullish on the manufacturing space. That is the other thing, especially after the China plus one story is continuing. There was a small blip, especially on the chemical side. But if you just look at the overall manufacturing space, be it on the pharmaceutical side, be it on the chemical side, even on the auto ancillary side, we are seeing defense is the other one, where we are seeing huge order books coming up, not only because of domestic orders, also orders coming from international, especially the export orders. It's a very large space. You have to identify stocks on a bottom-up basis, but that's the other space that we are quite bullish on.
Let me just sneak in one final one,
Sure.
Sridhar. If you let's leave the markets aside, but if you're allocating money to different asset classes at these elevated valuations, or post the heady run that we've seen in equities, what would your allocation be to equities? And within that, how much would be large, mid, and small as of now?
I think asset allocation to equity depends on the risk profile of individuals, right? So my risk profile may be very different from your risk profile. So it's very
Someone who's
difficult
looking at, say, for the long
So I
run.
think the general trend is that 1 minus your age should be your, or 100 minus your age should be your equity allocation. So I think that's a standard practice. I wouldn't want to change that. But my profile may be very different because I'm in the equity markets, obviously. So my allocation to equity will be far larger.
All right. But thank you for that thought and that advice as always. Sridhar, have a great day.
Thanks
That's
for
the word coming in on the markets. Sridhar also mentioned some of these manufacturing companies. We have in focus now Dixon Technology, because the company's arm, Paget Electronics, has entered into a contract manufacturing agreement with Compal Smart Device India. This is to manufacture mobile phones. Also, Dixon Tech has launched a new unit in Dehradun for manufacturing of washing machines. So there's lots going on with Dixon Tech. To talk more about this, we have the management. Atul Lal, the MD of Dixon Tech, is joining in. Mr. Lal, good morning, and it's always great seeing you on the channel and interacting with you. This agreement that you've signed with Compal, right? It's one of the world's leading manufacturers of notebooks, PCs, smart devices, etc. Just tell me, what is the synergies that you're seeing with this, and what kind of monetary or revenue contribution do you see from these synergies?
This is an extremely important agreement that we have got into with Compal. Compal is the CM and partner for a very large global brand. And we will be manufacturing for this large global brand. These are high-end devices. The lines are being set up. We expect to start in Q2 sometime in August, September in the forthcoming fiscal. Initially, it's going to be for the domestic market. Finally, we are expecting that we're going to be servicing the global requirements of this global brand from our footprint. Sorry, I'm not able to share the numbers because there are confidentiality clauses in the agreement. You'll have to bear with us for some time when we disclose the final details. But it's an extremely important thing for us.
So I understand that. So you're saying that you will start manufacturing in Q2 of FY25, and initially it will be for the Indian market and then you'll go global, right?
That's right.
Okay. Can you give us some sense of what is the opportunity? I don't want to, you to get into numbers for your own company, but just to understand what is the kind of growth that you're looking at in this space, because this is a big investment that you're making.
So we feel that this particular customer of ours is going to generate almost 8 to 10% of our revenues in a year or so. So it's a large contribution. And in the overall scheme of things, mobile undoubtedly is our largest trigger of growth, followed by IT products. So the growth in mobile as a segment is going to be extremely, extremely good. It's going to be almost 50 to 70% year on year. That's the kind of order book we have. That's the kind of customer acquisition we have pursued.
Mr. Lal, hi, good morning. This is a Taiwanese company, right?
That's right.
Okay. And you're saying 8 to 10% of your overall revenues, not mobile revenues, overall revenues from this in a year or so.
That's right. That's right.
Okay, so you expect some very fast ramp up in that sense. There was also another sort of news report, which said that you are also sort of in talks with sort of Chinese mobile company BBK Group, and a partnership is sort of going to be announced soon for the production of Oppo, Vivo, Realme smartphones. Is that? Could you comment on that? Is that happening?
No, we are in tie-up with a large Chinese ODM.
Okay.
Again, I humbly request you that I can't share the contours of that. So once we start off, we're going to share the details. It's still in works. So yeah, we have the tie-up as it works with the Chinese ODM, a very large Chinese ODM. Yeah.
Okay, so you're saying the tie-up is already in place, and or you're sort of in the process of doing it.
It's in the process.
It's in the process. All right. So I won't push you to kind of name it, but it's in the public domain in the sense that, I mean, there was a report citing sources that this is what is who you're talking to, which is BBK Group. It's China's largest mobile company. If it were to work out, etc., with this tie-up with the company that you're talking to, could it be as significant as the one that we discussed, which is Compal from Taiwan, or even bigger?
It's going to be even bigger.
It's going to be even bigger.
That's right.
And could you give us some sense? You said Compal 8-10% of revenues in a year. I mean, if this were to materialize, what are we talking about?
So this can be almost 12 to 15%.
12 to 15% of overall company revenues when this tie-up materializes. And by when will we hear firm details on this? The name and the contours of the tie-up, etc.?
Just wait for some time. These things take some time. They are complex relationships. The lines are complex. So just for some time.
Got it.
All right. Hi, Mr. Lal. Good morning and good to see you in. This is Nigel on this side. The Dehradun facility as well is, I think, for washing machines. And as per your BSC release, the annual capacity is around 24 lakh washing machines on a per annum basis. Could you tell us, post the commissioning of this, what does it take your total capacity to first in washing machines? I think for this year, you were guiding for around 1.8 to 1.9 million units.
So this facility is 2.4 million a year.
Yes.
Our facility, Tirupati, is another 0.6 million. So the total capacity within Dixon for washing machine is going to be 3 million. It's already 3 million. And you're absolutely right that we're going to close at around 1.8 to 1.9 million machines in the current fiscal. This is a significant growth. We closed at 1.2 last year. And we have an extremely healthy order book. So we expect another 20-25% growth in the forthcoming fiscal.
Got it. All right. So you'll be in that vicinity of around 2.3 million units odd for the next year as well on washing machines.
That's right.
All right. A couple of more queries. Since mobile is going to be the big driving factor, how is the volume shaping up? Nokia, I think, y'all were guiding for around 1.5 million units per month. Are you already at that? And also Xiaomi, I think commercial production had started, and then we were looking to head towards 500,000 units on a monthly basis. Has that been achieved?
So Nokia numbers that you are referring to are absolutely right. The commercial production of Xiaomi has started. Month on month, the volumes are increasing. The new models are being launched, NPAs are happening. The number that you are just sharing, I think we should be able to achieve in the later part of Q1 of the coming fiscal.
Okay. Can you also tell us, since you spoke about also the mobile manufacturing, the recent tie-up that you've had, you'll first begin in the domestic market and then you'll go to exports, right? So just trying to understand, last year your export contribution was about 8 to 9% of total revenues. Over the next 2 to 3 years, how much can you grow that to? And what would this mean for your blended margins or the operational performance? Would it get better?
You see, the growth in mobile is very, very significant. And to start with, it's largely for the domestic market. Export orders are also looking pretty healthy. However, I maintain that although there is going to be a significant absolute number growth in exports, the export revenues are going to be in a similar range of around 8 to 10%. And the margin profile of both exports and domestic as of now is similar, which is around 3.2%.
Okay. Apart from mobile and washing machines that we spoke about, are there any new product categories that you're looking to get into? Because you have a 250 crore investment that you're planning in terms of capex over the next 5 to 6 years. Will it largely be in the current traditional spaces that you're in, or are you looking to expand into new categories as well?
So we have already started commercial production of a new product category, that's refrigerators. We have set up a new plant of 1.2 million units, which is almost 12% of the Indian requirement for direct cool refrigerators with an investment of around 450 crores. The commercial production has already started and we have a decent order book there. The next focus is on a large opportunity of IT products, wherein we have bagged a couple of large contracts from global brands. For one of the brands, the production for the notebooks is going to start in April to June quarter. For the other large global brand, the production is expected to start in July to September quarter. So as of now, IT products and refrigerator is the new domain which we are pursuing. But in Dixon's case, we keep on adding new product categories. And now also is the time that our growth has largely been on the horizontal side, that we will be looking at, and we are seriously exploring the possibility of getting into displays, that is the vertical integration kind of thing, display assembly, display modules for mobile phones and notebooks. That's one project that we are pursuing. The teams are working on it. The project plans are being made. We are in discussion with some partners. So let's see.
All right. Thank you for that, Mr. Lal. It's always great to speak with you. We cover a lot of ground every time. And we hope you'll sort of tell us, first, whenever the deal with the Chinese company materializes, because as you say, that's going to be a really big one, as we understand it. Thank you very much for joining us here on CNBC. All right. Well, you got the market, which is down about 5 points. 21,950 is where we are trading at right now. Market breadth is negative. 1,300 stocks are lower, and you got about 800 stocks which are higher right now. We'll take a quick commercial break here. We'll come back, and I think we'll have the next management with us. So Mr. P.N. Vasudevan, Managing Director and CEO at Equitas Small Finance Bank, joins in to discuss their business outlook and, of course, the third quarter performance. Stay tuned.
Welcome back. Well, there's actually been quite a good recovery in the broader markets. The mid-cap index has cut its losses. The index was down close to 500 points. Now it's down close to 180 points. So the intraday chart of the mid-cap index should come up for you. Now it's down 200 points, so it's cut its losses. And the number of stocks advanced declining as well. It's not too bad. It's almost even Stevens now. So just keep an eye out on the broader markets. The headline index is in the green, but the bigger pain was in the broader markets. Just keep an eye out on that. Now again, they're moving a little bit away from each other. But let's get straight to our next management. The management of Equitas Small Finance Bank. Mr. Vasudevan, the MD and CEO of the company, joins us on the show. Hi, Mr. Vasudevan. Good morning, and always good to see you, Ben. Give us a few details about asset quality in the past quarter. What was the impact of the Tamil Nadu funds on the NPAs, and how much of this can be recovered?
Good morning. So the third quarter, we had a gross slippage of around 4%. That compares to around 3.3% of the second quarter. But however, if you look at the third quarter of previous year, the gross slippage was about 5%. So comparative to the same quarter of last year, 5% has come down to 4%. Typically, the third quarter is a time when most of the southern India, we experience the heaviest rainfall. And traditionally, historically, the third quarter slippages and NPA do tend to follow that trend. And fourth quarter generally, of course, picks up once the rains abate. In terms of our NPA, we also did a securitization transaction in the third quarter, which is the first time that we have done a securitization after becoming a bank 7.5 years back. And the effect of that was that, the denominator, the assets went down because we had securitized. If you adjust for the securitized portfolio, then our GNPA movement is not much, from 2.2% 2.21% in second quarter, it moved to 2.39% in the third quarter. So if you adjust for the securitization, the NPA hasn't really moved up much. The rainfalls that you mentioned in Tamil Nadu, we had a pretty severe rainfall in the month of December, but most of that is behind us and most customers have come back to normal now.
Okay, got it. So can you tell us, Mr. Vasudevan, hi, good morning, and hope you're well. Can you tell us what is the outlook as far as growth is concerned? What is the MFI portfolio growth looking like over the next, say, a couple of quarters? And what do you see as the big challenges now for the business?
So in our case, you know that we are one of the few small finance banks which have a very well diversified portfolio of assets. Microfinance, which is our unsecured portfolio, is about 19%. The remaining 81% are secured loans, comprising of 38%, which is our loans to small businesses secured by house property, 25%, which is secured against vehicles, and about 11%, which is an affordable housing finance. So you see that we have a very broad, spread out of portfolio. Microfinance itself is about 19%, which we have mentioned in the past that consciously we have been reducing that because the microfinance do tend to have a severe impact based on external events. In terms of overall growth, for the 9 months, we have a growth of 32% on the advances. But for the full year, we have been guiding that our growth will be anywhere in the range of 25 to 27, 28%. And on an ongoing basis in the short to medium term, we should be looking at around 25% growth, given the size of the bank, which is quite small actually still at this point in time, and also given the fairly large level of unmet demand in the informal economy segment that we actually service.
Okay, all right. Mr. Vasudevan, also if you could tell us, in terms of the margin outlook, what is your cost of funds and how do you see margins panning out from here on?
So yes, we had the bad impact of the interest rate rising scenario because we are a bank with about 85% of our loans on fixed rate basis. So when the rates have been going up over the last 1 to 1.5 years, our cost of funds has been going up, but we have not had the benefit of the portfolio yield moving up because 85% is fixed loans. And in spite of that, we have been able to maintain a pretty decent returns ratios. Our NIMs, we ended last year at about 9%, and the NIM for the third quarter, December quarter, was about 8.36, and we have guided that we may have an exit NIM in March 24 of around 8.25 to 8.3%. And overall, for the full year, the NIM should be about 8.5 compared to 9 of the previous year. So effectively, you can say that 0.5% is the full year impact of NIM based on our cost of funds moving up and a large amount of loans being on fixed rate basis. And now when we see that the next few quarters, we expect the rates to either remain steady or maybe even start going down. That could be interesting time for a bank like us because we'll have the reverse impact over the next few quarters.
So on the credit cost, how much has the MFI book seen an increase in credit costs? If you could just quantify that for us, and what is the expectation over the next few quarters?
See, MFI, as I mentioned, is about 19% of our book. So, we don't really need to focus too heavily just on that 19% of the book. But to specifically answer your question on MFI, our credit cost in the MFI is in the range of around 2.5% compared to the overall credit cost of the bank for the first 9 months at 0.9%. So you can see that, yes, microfinance has had a higher level of credit cost compared to the rest of the book. Our pre-COVID credit cost for the bank as a whole used to be about 1.25%. So I think we are pretty much getting back to our normal levels. Our GNP used to be 2.5% pre-COVID. We are about 2.4% now. Our credit cost should be 1.25. We are at about 0.9 or 1%. So more or less, I think we are getting back to the pre-COVID levels at the bank.
All right. We leave it there, Mr. Vasudevan. It's a pleasure having you with us here on the program, as always. Good luck.
Thank you.
And good speaking with you. All right, we'll, I think, take another, all right, we won't take a break. We'll just sort of update you on the market. It's blinking like a traffic signal, red and green, nothing at all, quite literally. 21,950 is where we are at, so absolutely quiet is what you have. Let's focus on another company now, and this is the largest drone maker in the country. I'm talking about IdeaForge. The company has entered the US market and will begin sales from the next financial year, that is FY25 onwards. The management says that US drone market has gained pace after the pandemic. Let's discuss this more. Vipul Joshi is Chief Financial Officer at IdeaForge. He's joining us right now to take some questions. Vipul, good morning. Great to have you with us here. Thanks very much for your time. Prashant here. Can you tell us about this US market foray? In what shape and form? Is this going to be via partnership? Will you sell directly? Is all the sort of technology-related aspects completely cleared? What specific segment are you looking at within drones there? What's the TAM for it, the total addressable market, and so on and so forth? Go on.
Sure. Thank you. Basically, so US market is part of our strategy to increase our foothold across the globe. And obviously, US becomes the prime market because of today their focus being looking at any China alternatives for the use cases that have already been part of the market. Plus our own efforts of increasing the civil side of revenue base also helps us when we enter the US market. Today, our focus being, inspection, your law enforcement, as well as mapping use cases where we are focusing in the US. US also is a strong because, again, the whole penetration of the technology in terms of usage has already been there it's quite a mature market, historically speaking. And there we bring in our best-in-class of product line. You've already launched last year our 90-minute system, which was in a quad category, not uncompeting in terms of what is available in the global market. And that is what we've taken there, and we started our demonstrations as we speak. And that's the early green shoots that we're looking at, and probably that will add into the revenue.
Can you give us some numbers, Vipul? What is the addressable market that you're looking at? And what category? You said civil, right? In the US.
Yeah, civil category. So because
which is use cases such as?
Yeah. So in terms of all your mapping, inspection. These are all the civil use cases, and even the law enforcement, which is under the, so to say, civil aviation, would be categorized as civil. We are not right now immediately targeting the DoD in US. We would be looking at understanding the overall spectrum of validation that the Department of Defense would be looking at in inducting this technology. While we are excited that that might also be relevant for us because we have the kind of technology that will be helpful for them, especially with regards to autonomy of the systems.
Right. What is, got that. You will look at it, but for the civil, for the product category that you are looking at now, what is the addressable market available to you? I mean, that you can address actually.
So right now I have ballpark figures on certain numbers, especially if I talk about from a mapping perspective, then till about FY 2028, it will be about $2 billion market, and even similarly, it should be around your inspection category as well, which should also scale to about $1 billion to $2 billion market by FY 2028.
So $2 to $3 billion TAM by FY 28 for this product category.
Yeah, at least the low-hanging, the first movers that we will be targeting in the initial phase.
And is there any sense of what you can sort of take from this? What could your take be? I mean,
right now it is an early stage because we've just entered the market. We are figuring out where our most relevant use cases, especially our applicability. And because we've taken a very fresh new product, which has never been seen in the US market, I think people are also taking their own time to understand the applicability and the usage.
Got it. Vipul, hi, good morning. I wanted an order book number. The last number I have is 175 crores, but that is, I think, updated as of December. What do we stand as of now in terms of order book? And in the US market, which is primarily a focus area, what kind of order visibility do you have, if you can share a number with us?
Thank you for the question. Right now, I do not have any fresh numbers to quote because the last quoted number still stands at about 175. As I said, that we've just entered the US market and demonstrations and validation of the product is happening in the market. The order book building will, as a process, start in the coming quarters.
Okay, fair enough. So we'll wait for that to get an updated number from you. But if you look at defense, right, as a vertical, the contribution to your overall business has gone up significantly. Earlier, it was around 69%. Now, almost 93% of your business comes from the defense vertical. Just wanted to understand, is this going to be the revenue mix going forward, where civil is going to be a very small portion of your business? Or do you have any plans to diversify into other streams as well?
So as we said that, today defense is our prime buyer, or you can say that they have the requirements laid out. We continue to serve the customer, which is today buying, while our intent is to increase the pie on the civil side. And that's the reason why multiple initiatives of being drone as a service initiative that we are trying to bring in, also being part of multiple geographies where we target the civil applications, and that will help us increase the pie on the civil side of things, which is not an impact that we will see in the immediate financial or the next 2 financial years, but there's a constant effort to multiply the size in the civil side of things. And that's the reason why we've always stayed in the dual use categories as a drone development as well, and never focused on only a defense product, so to say.
All right. Hi, Vipul. Since you're talking longer term numbers, then where does civil head to from the current mix? The longer term, say the next 3-4 years.
We're hoping that maybe the shift should come to about 60-40 in about maybe 3 to 5 years.
Okay, 60 defense, 40 civil. Got that. So that's a big increase from current levels. What about broad numbers? The revenue trajectory on a lower base, but immense opportunity size. What is the ballpark revenue growth we could look at, as well as targeted margins?
Well, since we have not been giving any guidance on the numbers side of things, we say that we are targeting the larger pipeline, which is multifold from our current size of revenue, and we're hoping that we will continue to show significant growth from our year-on-year numbers.
All right, Vipul, we'll leave it there. It's great speaking with you. Appreciate you joining in and running us through, all of that detail as we look ahead. Good luck. Thank you for joining us. We'll bring in Mitesh now to run us through what he's making of the sort of market. We're up about 50 points, 21,100. 20,990 is where we're at, about 50 points high. So there's a surge which has come through, definite surge which has come through, and it's materialized in the last 5 or 6 minutes or so. 950, the index was at about 21,940, and we added 50 points in the last 5 or 6 minutes or so. Mitesh is with us. Mitesh, the dip's been bought for now. Do you think it'll last? And what are your trades?
Good morning, Prashant. I have what I will call as an opposite view. I think, I would want to see these rallies and then try and take some short positions. For me, I think till the Nifty manages to get past 22,000 60, 70, 80 zone on the spot levels, I think the structure will be weak. And similarly for the Bank Nifty, I think the corresponding level is around 46,300 to about 46,325. So I think closer to 46,200, I would want to take put options positions for the March series ending expiry for the Bank Nifty, with assuming that 46,350 on the upside may not be breached. And similarly on the Nifty, closer to about 22,050, I would want to short with a 50-70 point kind of a stop loss. And shorting means that I would suggest buying into put options for the time being. And then expect that, the levels of 21,900 would be revisited, maybe even violated in the coming few days. So the structure for me still remains negative, despite the fact that we have a good pullback going on. And on the stock side, I have one buy and one sell call. Havells is something, which did very well yesterday as well, and should see continuation, though it's kind of flat today. Buy here with a stop below 1,500 for targets of 1,600. And Jubilant Foods is something which I think might decline more. It's been declining the last few days. The trend is negative. So take a short position here with a stop at about 474 and a target of 450 can be looked at.
Okay, all right, got it. Any other stocks that catch your eye right now? We're having a lot of auto names that are moving up. Maruti, M&M are up in the green. Reliance, of course, is your big mover right now. Titan, SBI, Wipro are all in the green. Anything else from the large caps that you like, Mitesh?
See, in fact, Maruti is something, which I think could be a very interesting stock. The price started rallying from levels of 9,800, went to about 11,600, 650 zones, and then is giving a pullback. Around the lows of today, 11,100 to about 11,000. You have multiple moving averages and retracement areas. So I think with today's low being the reference point, around those levels, it's buy into this one with a 100-point kind of a stop loss. And I think it could retest the highs of 11,650, maybe even surpass it, because the long-term and the medium-term structure are very, very positive for Maruti. So that's one stock definitely which stands out.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's do a quick revision then of all the Nifty changes that came about yesterday, or the NSE changes that came in late last evening. On the Nifty itself, after much amount of volatility and nervousness, Shriram Finance, yes, it made it to the list. So effective March 28th, these changes will take place. And the one that made it its way out is UPL as well. And both these two changes are on expected lines. For the time being, I think we have GPT Healthcare. That's the one that's listed, and listing in style, up close to around 15% approximately. So blockbuster listing is what we've seen. The stock flying away and volumes as well picking up. Thumbs up out there, and the entire promoter group quite thrilled as well as thumbs up on that one. We'll speak to the management I think the next half hour or so. Let's get back to the changes that we were talking about, the NSE changes that were announced. On the Nifty, Shriram Finance has come in after a lot of volatility and uncertainty. The one that's made its way out is UPL. Nuvama, they have come out with their flows picture. Because of this inclusion, they say that Shriram Finance will see close to $270 million of inflows. UPL, that will see outflows to the tune of close to $100 million. Nuvama have also put in some expected moves in the stocks. For Shriram Finance, they're saying it could move by 10 to 15% by the end of March, according to them. While in UPL, it could see a single-digit correction on the stock. So that's what they say. On the Nifty, next 50 changes, the inclusions with potential flows come up for you on the screen. Geo Finance, PFC, you have Adani Pa, REC, as well as IRFC. And there's likely to see a good amount of inflows as well. While this is according to Nuvama's note. While on exclusions, you have potential outflows from Shriram, PI Industries, PNG Health, Muthoot, and Adani Wilmar. So all of them come up for you on the screen. So some of these stocks reacting, case in point being a Shriram Finance because of the uncertainty the last few days, and now in fact the stock is reacting positively. Well, on that note though, let's slip into a short break. On the other side, we'll turn our attention to the commodities market. Manisha Gupta will be joining in to tell us exactly that.
Welcome back. Let's get a quick handle on what's happening in the world of commodities. Manisha Gupta is joining in. Manisha, hi, morning.
Morning. Thank you for that, Sonia. Well, I'm looking at the agri-commodities and agri-industrial commodities for that matter, and almost everything seems to be running up and away. Whether it's about castor, sugar or cotton prices, everything is trading at a multi-month highs right now. I'll focus on cotton right now, which is trading at 1.5-year highs in the international markets. And when you talk about the Indian prices, we are trading at a 9-month highs onto this one as well. Well, this is actually the biggest monthly gain that we've seen since September 2022 come in for the cotton prices. The big surge is coming in the Indian and the international markets as well. For India, in the month of Feb, we've seen gains of 16% and a big surge in international markets with 27% of gains happening in the matter of the month of February itself. Well, you are looking at the ICE futures as well. Open interest for that one, about 65 to 70% of the overall open interest is lying with funds and speculators. So that tells you that that is where the interest really seems to be coming in from. If you look at the Indian cotton exports, well, the estimates have been stronger for that as well. So it's not just funds, the fundamentals also seem to be on the positive side. We have seen 2-year highs in sense of exports at 400,000 bales happen only for the month of February now. The Indian cotton is competitive. It is still lower priced as compared to the international markets, is the reason you are looking at higher exports from India right now. India also is the second largest exporter in the world, and as of now most of the exports are going to China, Bangladesh and Vietnam, and Indian exports for this current financial year are expected anywhere between 2 to 2.5 million bales, which is much higher as compared to the previous year then. I also want to take you to the Indian report card right now when it comes to cotton as a commodity. So 215 lakh bales have already arrived into the market is what the trade tells us. Out of this, 75 to 80 lakh bales is still with the farmers, so this is yet to come into the markets. And as the prices have gained by 16% in the month of Feb, the farmers are holding on to their crop right now. Cotton Corporation of India has been procuring cotton at the MSP, and that is to the tune of 32 lakh bales is what they are holding also. 18 to 20 lakh bales is with the industry, which is just about 8 to 10 days of industrial consumption there. So markets do believe that the prices have run up ahead of time given all these fundamentals. And from here, you may not look at profit taking, but some stability is definitely something that the markets could do with.
All right, Manisha, thanks very much for that. Well, let's talk about the MSCI February review now. MSCI earlier this month had announced quarterly reviews. The market will see those flows in today's session. Last 30 minutes will be crucial. Vivek is here with details. Vivek.
Well, absolutely right. So the good news is that, we will see close to over $1 billion of inflows coming into the Indian markets today, especially in the last 30 minutes. These will be passive funds, that track the MSCI standard index quite closely. Just to reiterate, which are the stocks that will be in focus on the back of this particular development. Number one, 5 additions in the MSCI India standard index, largely dominated by PSU names. NMDC over $165 million of inflows. GMR Airports over $145 million of inflows. Union Bank, BHEL and PNB all in the range of between $150 to $160 million of inflows. No deletions, but when you're talking about the MSCI small cap index, 27 additions and 6 deletions. And with this, what actually happens is that India's weightage as far as the MSCI EM index, from the range of between 8 to 10%, just, as recently as 2020, now is well over the 18% mark. So significant development as far as the entire weightage is concerned.
All right, thanks a lot for that. Well, let's step into a quick break. On the other side, our special segment, It's the Economy. Lata will get chatting with Nitin Agarwal of Motilal Oswal to focus on the PSU banking space and why Motilal still likes the sector despite the rally it has seen.
Welcome to It's the Economy, though this is actually more markets than macros. PSUs have been the rage of the market, and today we discuss PSU banks. Most of them have risen between 100 and 160% in the past 12 months. Just look at the table running by. Motilal Oswal has come with a fresh report on Feb 26th, reiterating their overweight stance on PSU banks and actually picking half a dozen as their favourites. The report argues why the PSU bank run has more juice left, and so I suppose you should hear out the author of the report, who is with me now, Nitin Agarwal, the head of banking financial sector, BFSI Institutional Research, Equities at Motilal Oswal. Nitin, good morning, and thank you very much indeed for sparing time. It's a really interesting report, so filled with data. Let you speak for yourself. Why do you think the PSU banks are a good buy?
Thanks, Adhan. Good morning to you and all. Of course, see, last few years, PSU banks has been reporting a very strong performance, and that is completely backed by earnings and the way the asset quality has improved. So from a point in time when the GNPs were very high, today if you look at PSU banks are going to broadly reach the levels of net NPA of private banks by FY24 end, and by FY26, we are estimating the net NPA levels to be similar between the two segments. And the valuation arbitrage was very considerable, which with this rally has seen some bit of narrowing. But still looking at the outlook wherein we are still expecting these banks to deliver 18-19% ROE over the coming years. And even the earnings growth is likely to sustain around 20% CAGR. And though this is to some extent getting a boost from banks like PNB and SBI, which are having a relatively benign base, but other PSU banks also we are expected to deliver 17-18% earnings CAGR, and which is where we believe that the rally overall in the sector will continue, and the valuation at one-time book, which is where they have come out on FY26, still appear reasonable in context to that overall balance sheet strength and the profitability outlook.
Okay. Your arguments are much more convincing, and many of your numbers in your report are running as you speak. But is there more juice left? That's the question people will want to ask. Like we just pointed out, 100 to 150% rise in the past 12 months. And most of them, by your own reckoning, adjusted book value, price to adjusted book value is one time already. Historically, it hasn't gone beyond that. So you still think there's juice?
I think the return expectations have to be calibrated, of course, and which is where if you see even in our report, we have put out an average upside of around 15-17% for these banks this time. If you look at our own rating and targets in the prior 3 years, we would have written notes ranging between 25 to 40% upside on these banks. So first and foremost, yes, the return expectations have to be calibrated. But when you look at what is impacting the sector as of now, the private banks all are facing some overhangs around CD ratios, which are stretched for them, margin compression cycle, which is continuing, and the normalization in credit cost, which is what everybody is staring at as to what pace it can happen and how soon it can happen and to what level the credit cost can rise. Because there is a very extreme behavior on credit cost by certain lenders who are already witnessing the normalization in credit cost. So which is where you are watchful on private banks as a whole. But PSUs, they have ample liquidity. Their MCLR repricing will continue, and therefore, to that extent, they will relatively do better on margin front. And asset quality, barring SBI, if you look at the other banks, they are still fairly high on credit cost. So for them to move up further from there, it's still not our base case. We still believe that with overall recoveries and upgrades from the back book, which is like the high quantum of TWO return of asset pool and the GNPs that they still have, can still make up for a pretty good number versus the slippages that you're looking at. And which is where the credit cost overall will remain in control for these banks. And for these reasons, we continue to like the sector. And so what is limiting the rally from here for them probably is one fact that private banks as a space overall has derated very considerably, with many banks trading now between 1.4 to 1.7 book. So which is why PSUs at one time definitely looks like that there is a very narrow gap now that you're looking at between PSUs and private versus probably all these years in the past. But looking at how the performance is going to be for these banks, I think there is still money to be made in these stocks.
Okay, so what you're saying is that in the past 3 years, as you point out, the PSU banks, or 3 or is it 4 years, PSU banks have actually trebled in terms of prices, but private banks rose by what, 43% you have said in terms of prices. Going forward, you think private banks are likely to rise a little faster than PSU banks?
I think there will not be a very big gap between the two segments.
Okay,
But PSUs, because they are not having any of these challenges to go with from here in the immediate quarters, they will continue to do well as a space.
Okay. Okay, so there may not be much to choose in terms of the price rise. Okay, now that I have you with me, what's your sense about HDFC Bank? Is it now bad enough to be bought or stressed enough to be bought? Or do you think it will linger at these levels for a long time? The price correction, the time correction will be there before the prices rise?
I think the stock has seen a fair degree of correction in this quarter alone. And as the bank now delivers on some key metrics around the deposit progression and around margins, of course, while we are not expecting any meaningful improvement in margins in the near term, I think it is going to be a long journey for them to come back to 4% levels. But any stability around that front is something that would be watched keenly. But from a price point, I think the stock trades at very reasonable level at around 1.7 times price to book on 26 and 10 times earnings. So that looks fairly attractive, and we still like the franchise. We believe that while last 1 year, especially post-merger, things have not been moved really in the right direction as such. But there is a strong franchise that HDFC Bank, of course, has. And as this reports some bit of traction on deposits and some of the other key metrics, I think the stock, therefore, should start yielding a positive returns in the coming months.
Okay. It's just that the wait is getting, trying patience. Coming back to your report, you have recommended SBI and Union Bank as your top picks. If you can tell me why, and why not Canara Bank? Because by your own analysis, the ROE is highest for that bank.
Yeah, certainly. So, see, SBI certainly is, because what we are seeing right now is a cyclical upturn in the sector. If you look back, and while the valuation history last 8-10 years will not be a right reflection, because the levels of net NPA, the strength of earnings in terms of ROE, what we are looking at is something that has not happened before in the last 10 years for these banks. And therefore, the valuations, if you look from the lens from the past angle, you will feel that the valuation multiples are constrained for these banks. But looking at that with the possibility of this government coming back with the overall corporate cycle, therefore strengthening further and capex demand also reviving, which is where PSU banks have the ability and the history to lend. And they are doing a fair good underwriting job as of now across segments. So that can drive up the numbers and growth for these banks and further reduce the differential in terms of loan growth versus private sector. One of the interesting points that we have mentioned in the report is, if you look at the last 3 and 4 years, the market share loss for PSU banks have narrowed considerably. They were losing 600 to 800 basis points to private bank in every 3 to 4 year block. That market share loss has reduced to less than half in the last 3-4 year block. And that's something that we expect to further narrow down to private banks in the coming 2 years.
Okay. Any word on Canara Bank? I mean, why is it not up there, considering that the ROE is so much better? It seems to be an underappreciated bank for me.
Yeah, it has been, yes, I agree to that. And which is why, if you look back to our reports, we have been pitching Canara as amongst our top buys. And in fact, the price target that I wrote on the third quarter results in January, that which was almost a 22% upside, that got met in February. So it's only because the run-up has been very sharp and we've been marketing the stock right from 200 levels. So we have therefore not kept a top buy on Canara in this report, and rather for Union, wherein we believe that it's relatively cheaper. And the earnings progression for Union, the asset quality normalization is also happening almost on the comparable lines. So which is why we have went ahead for SBI and Union in this report as a top idea.
Okay. A lot of people may want to book out considering the excellent profits people have made, provided, of course, they entered a year ago. There would be a bit of a desire to book out. What is your sense about the longer-term performance? Let me tell you my memory as a banking reporter. I probably began in the late 90s and saw the cleaning up of the banking system, all those public sector banks coming to the market, the big steel cleanup when Jindal Ispat and SR were restructured. I saw through all that period, and then the good times lasted almost from 2003 to 2013. So do you see a good 10-year run for PSU banks, probably 2 or 3 are over?
I think that's quite a possibility, because the way things have shaped up for these banks, the intent that is there both from the management and as well as from the government, to maximize the value of PSU enterprises. And this rally is just not limited to PSU banks, as you know. This is like penetrating across all sectors. And there could be some further reforms that can happen in respect to PSU banks that will drive further interest in these stocks. But of course, these are relatively longer term things. But over the next 5-10 years, as you're asking, there is a possibility that these PSU banks can continue to do well because overall underwriting for them has improved. One very interesting data point, if you look at the SMA numbers over last 4 to 6 quarters, there used to be a very wide gap between PSUs and private banks 3 to 4 years back. In last 4-6 quarters, the gap has just been very sticky and very narrow at around 10 odd basis points. So that means PSU banks are doing as good a job on underwriting as a private bank. The SMA numbers also are reflecting that, which is not changing versus private banks.
Okay.
So, and that indicates that asset quality cycle for them will remain on the positive side, and which is why there is a possibility that on credit cost, certain banks like PNB, Canara, Union, they may go down the curve further in FY25.
Okay. Point taken. Clearly, in terms of asset quality, the entire ecosystem has learned a lot. You know, you have the CRILIC database now. You have the SMA monitoring now. So, and perhaps hopefully expected credit loss will also come in a year or two. And that should perhaps put in these institutional mechanisms against asset quality deterioration. But I have my own fears on how they will take up the fintech challenge, which private sector has taken on very well. Coming to fintech, your words on Paytm. Where do you all stand?
I think, of course, the regulatory restrictions has really affected things, and the stock price reflected that. And of late, it has been trying to find its feet, and given that it's going to take them some time to ensure that the business comes back towards normalcy. There is no leakage of business, as in they shouldn't really lose any merchants, any customers in this transitioning process, and the business growth should come back. So which is where all these uncertainties are playing heavy on the stock as of now. While we believe that, of course, there is a definite value to the entity because ultimately they have a very large transacting user base, almost 10 crore monthly transacting users they have, and a fair bit of share in the overall GMV, and amongst the sizable players in the overall UPI spends. So there is an inherent value that is there in the franchise. And as the stability comes and they are able to tie up with banks and handhold this transition further with ensuring minimum leakage, I think one can see some stability to positive returns in the stock in the coming months.
Okay, yes, and they have a lot of cash as well. That itself, I believe, gives about 170 rupees to the stock. So perhaps they can make good. And my colleague Nimesh was pointing out that in many of the previous cases of difficult banks, when the management changes, normally that's the bottom and banks do well. So anyway, that was Nimesh's point of view. Thank you very much, Nitin Agarwal, for joining us and handling a range of questions on the entire banking and financial space. The key message being that there is juice left in the PSU banks, even after this wonderful rally that these stocks have seen. The pick for MOFSL being State Bank and Union Bank. That's their top buys. Okay, with that, we come to the banking, we come to the market discussion closure, but I'm going to open the macro discussion because today we have a very big macro number coming in, the GDP number. Now, I must first remind you that the last day of February, usually 28th, in this case, February 29th, you get the third quarter GDP number, but you get a bunch of revisions. So I must tell you that the Government of India gives you 6 versions of any one GDP number. The first version comes out in the first week of January. So for this year's GDP, the first forecast came on Jan 7th. And then on the last day of February, you get the second advance estimate. Then on May 31st, when the year is done and there is 2 months to calculate, you get the first provisional estimate of the GDP of the year gone by. And then you get the first revised in the next February, the second revision in 2 years later, and the third revision 3 years later. So you actually get 6 versions of any GDP. So today, what are we going to get along with the GDP the third quarter GDP numbers? You will get the third revision of the FY21 GDP, the second revision of FY22, the first revision of FY23, and you will get the second revision of the current year. But we will look at the Q3 number. Please bring back the Q3 number. That's the most important number. Our poll says that we are going to see a 6.7% growth, which is fairly strong, but short of the 7% mark. That's because, the Q2 was 7.6. Compared to that, you're going to see a slowdown. And this is despite the fact that you have a very low base of just 4.5% year ago. What will be the composition? Agri will do badly. We know that, it's a bit of an El Nino impacted here. So 1.3% on agri, but industry is going to do well in that. In particular, construction, because of government capex, is going to do extremely well. And you get a 7.6%. Services is just 7.3. It's normally a high-performing sector. But trade, hotels, transport and communication is still not got back to its old mojo. Then you will get the full year second estimate of the current year. Here again, the NSO is standing at 7.3 and RBI has almost endorsed that number. But the economists I polled, and I polled a dozen of them, the average still works out to 7.1. They're not quite convinced that 7.3 will happen. Though they say the NSO may continue to keep 7.3, but they expect that when the number comes on May 31st, it will be more likely 7.1. Besides this, you must remember that, like I told you, the other three revisions are going to come. Third revision of FY21, second revision of FY22, and first revision of FY23. These are the existing numbers. If any of these change, which they might because of revision, then because of the base effect, you may see a different Q3 number and a different full year number for the current year. So we have to be prepared for base revisions. That's anyone's guess. It's a bit of a card trick over there. Let's see what comes. We have to wrap up on Bazaar on that note. After a gap, after a break, you will have Chart Pass.